Hello, Wealth Tycoons. Hope you're ready for another amazing story. MicroStrategy, a company that once thrived as a leading business intelligence software firm, has now become synonymous with Bitcoin. My research shows that it's no longer just a software company, it's something entirely different. How did this shift happen? And more importantly, is this a genius financial strategy or a ticking time bomb waiting to explode? Stay tuned to the end, where we break down whether this bold bet could make MicroStrategy a historic winner or lead to financial ruin. MicroStrategy's story begins in 1989, when Michael Saylor and Sanju Bansal founded the company with a vision to revolutionize business intelligence. In an era where data was underutilized, they built powerful analytics tools that allowed companies to make smarter decisions. From financial institutions to Fortune 500 retailers, businesses relied on MicroStrategy to process massive amounts of data, uncover patterns, and drive profits. Over time, the company gained a solid foothold in the industry, serving high-profile clients like Facebook, Starbucks, and even major U.S. government agencies. Unlike flashy Silicon Valley startups, MicroStrategy wasn't in the headlines for rapid innovation, but rather for steady, reliable service in enterprise analytics. Yet, as technology evolved, the market for business intelligence became increasingly competitive. Companies like Tableau and Microsoft Power BI began to take the lead, offering cloud-based solutions with greater flexibility. MicroStrategy, while still a player in the space, struggled to keep pace. It needed a new edge, something that would separate it from the pack. That game changer came in 2020 when Michael Saylor made an unexpected and radical decision. He announced that MicroStrategy would begin converting its corporate treasury into Bitcoin. At first, this seemed like a simple hedge against inflation, but it quickly became clear that Saylor had far bigger ambitions. Instead of making a modest investment, he went all in, borrowing money and issuing stock to buy even more Bitcoin. He didn't just believe in it, he was betting the entire future of MicroStrategy on it. This wasn't just a side investment, it transformed MicroStrategy's entire identity. No longer just a business intelligence firm, the company became a de facto Bitcoin proxy, attracting investors who wanted exposure to Bitcoin without holding the cryptocurrency directly. As of 2024, MicroStrategy owns an astounding 190,000 Bitcoin, valued at tens of billions of dollars. To put that into perspective, no other publicly traded company has come close to this level of exposure. Its strategy has followed a simple but aggressive playbook. Instead of reinvesting profits into R&D or acquisitions, every spare dollar goes into buying Bitcoin. When the company runs out of cash, it issues new shares, diluting existing shareholders but raising money for more Bitcoin purchases. And when that's not enough, MicroStrategy takes on debt, issuing convertible bonds to continue stacking Bitcoin. This cycle, known as the MicroStrategy Bitcoin Flywheel, works beautifully when Bitcoin is on the rise. When prices climb, the value of MicroStrategy's holdings skyrockets, pushing up its stock price. But if Bitcoin crashes, it exposes the company to massive financial risk, raising questions about whether its software business alone can sustain it. While MicroStrategy still operates its traditional business intelligence division, the numbers reveal a stark reality. In the second quarter of 2024, the company reported $111.4 million in revenue, a 7% decline year over year. Subscription revenue saw some growth, but overall, sales continued to struggle against cloud-based rivals. Worse still, MicroStrategy posted a net loss of $123 million, a drastic shift from the previous year's profitability. So, while the software division still exists, it's becoming clear that MicroStrategy is no longer primarily a tech company. Instead, it has turned into what many call a leveraged Bitcoin ETF in disguise. This transformation is both bold and incredibly risky. Bitcoin's price volatility is legendary, and while Saylor insists that Bitcoin is the future of money, that future remains uncertain. If Bitcoin continues to rise, MicroStrategy could see its stock price soar, and Saylor will be hailed as a financial visionary. But if Bitcoin crashes, the company's balance sheet could be devastated, leaving it in a precarious position. On top of that, regulatory uncertainty looms large. Governments around the world are still grappling with how to regulate Bitcoin. If strict new laws are imposed, MicroStrategy's ability to buy, hold, or even use Bitcoin as a treasury reserve could be threatened. Meanwhile, traditional investors remain skeptical, worried that the company's stock dilution strategy is unsustainable in the long run. At the end of the day, MicroStrategy is walking a financial tightrope. If Bitcoin continues its march upward, it could become one of the most valuable tech companies in the world. But if Bitcoin's value plummets, its software business alone may not be strong enough to keep it afloat. So, what do you think? Is MicroStrategy's Bitcoin first approach a visionary move that will change corporate finance forever? Or is it an unsustainable risk that could end in disaster? Let us know in the comments. And if you found this breakdown insightful, be sure to like, share, and subscribe for more deep dives into the biggest business stories shaping our world. See you in the next one.